So banks are failing, and I want to give you this warning because just the other day, I got an email from a community member, and you won't believe what she found. She went to her local bank to deposit some money through the drive-thru. She couldn't believe it. She went up to the drive-thru, and there was a sign, and the sign read this: "All deposits and withdrawals must be done at the drive-up ATM." So no more tellers at the drive-thru. You have to use the ATM. Now, probably thinking, well, why would they do this? What's crazy about this is I personally bank at two different banks that they both do this. The banks don't have a drive-up teller anymore. They don't. They have the drive-up location and they have 3 or 4 different ATMs. That's what they have. And if you want something that the ATM cannot offer, then you go inside. That's one of the reasons why I have not been in a bank for a while. Because why go into a bank? Now, this is a sign of the times. Banks are attempting to cut costs. Their greatest costs are their employees. This is with any business. That is the biggest expense. Banks right now are just losing money. Okay? They're losing money. And if they're not losing money, well, then you got the CEOs coming out and saying, well, we're not sure of what it's going to look like this year. We are preparing. We're holding back some of our cash. We're not investing as much. We're not lending as much. That's a big one. Now, it's not just with drive-through tellers though. Listen to just some of the banks that are cutting staff lately. And these are not just here in the US either. Barclays, they are cutting their workforce in corporate and investment banking by 3%. Citigroup, they've eliminated dozens of jobs in their investment banking division. And the bank, they made a lot of money through rising interest rates, but they now fear that the central banks will cause a downturn. So they're preparing ahead of time for this event. Again, that's a concern. We also know that Credit Suisse, they want to cut its cost base by $2.68 billion. And they plan to cut 5% of their private banking division as well, but that's in Hong Kong. We know Deutsche Bank, they're cutting dozens of staff in New York and London. And a lot of times when you cut dozens of staff, or 5, 10, you cut a certain executive division or whatever. What this usually does is you cut the executives once the executives are out, because if they don't need to manage anybody because the rest of the employees, well, they're going to be out as well very soon. Well, you cut the high-ranking members, cut the people that are costing the most money. A lot of times, that's the executive. So you get rid of them, then you move on to the next group and the next group and the next group, right? So we'll see what happens there. We also know Goldman Sachs. They're actually laying off more than 3,000 employees here in the United States. This will be the biggest contraction for the bank since the financial crisis back in 2006. We also know HSBC. They're not only removing about 4,000 employees, but they're closing more than 100 bank branches as well. Morgan Stanley, they're also cutting jobs also. Now, it's not just the big banks. It's not just your Morgan Stanleys and your Goldman Sachs and your Deutsches. It's the smaller banks as well. They're making cuts too. Now, I talked about this in the past where one bank manager in California, they sent me an email a while back saying that they're cutting their entire mortgage division. That makes sense. When Wells Fargo wants to get out of the mortgage industry, that's a concern, right? When one of the biggest lenders wants to just get out of it, that's troubling. And another branch manager from the East Coast, she sent me a thing saying that she was likely out of a job in the spring as her branch is likely to be closed down very soon. But as I said, when the banking industry is hurting because they lay off employees. They structure their business or restructure their business. And they right now, they're not doing a whole lot of lending. That's how banks make money, is through lending. So if the bank isn't doing the one thing that they do to make money, well, they're going to be hurting very soon. So all these things have been happening lately. So honestly, it's just a matter of time before we see the banks collapse very soon. Now, what can I tell you moving forward? Here's what we know. banks are failing. They have a small window to try to recover. Chances are banks are not going to be able to recover in time. Why? Because they're not lending. So even though banks aren't lending now, here's the problem. That means in the future, they won't be getting any money back in. Again, a bank only makes money if they lend money. Well, if you're not depositing money because you don't feel safe that it's going to, or don't feel right, or confident that's going to be safe in the bank. Well, for instance, a lot of people have just made runs on the bank. Go pull their money out. They're going to put it in gold and silver and other things that could potentially hold their value a little bit more than just the regular dollar. So we're going to see what happens. One thing I can tell you is if you have 100% of your money in the bank, that might not be the best decision. Now, I don't want to try to give you financial advice here because everybody's situation is different, but you may want to diversify. Take your money and spread it out so that all your money is not in one single bank. Like I said, I have multiple bank accounts, and the reason I have multiple bank accounts is because you do not want to have all your money tied up in just one bank. Because what happens if the bank goes under? Well, you're FDIC insured most likely, so that's good news there. The other issue is your money is still tied up in a bank that's going under. That's not what you want. All right? So that's what we know at this time. As always, as I know more regarding the banking industry and what's going on with your money, I promise I will fill you in on all the latest news and updates. Again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.